Okay, for this video, we are now going to focus on the Schedule F balance sheet for the Form 5471. So the balance sheet, pretty straightforward. The idea here is you're reporting the foreign corporation's balance sheet information, beginning of year numbers, end of year numbers. Everything is expressed in US dollars. So if we look back at our required information table here, we have a Schedule F, right? So Schedule C and Schedule F are on the same line item. Schedule C is the income statement. Schedule F is a balance sheet. These two schedules are required for Category 3 and Category 4 filers, right? So if you're a Category filer outside one of those two, you generally don't have to report this information. Now remember our fact pattern, John here, he's basically every category of filer, so he's definitely a 3 and 4, and so for those reasons we're completing Schedules C and F. Now if we go back to the balance sheet here, note at the top here, it does ask us to report everything in US dollars, right? So this is consistent with Schedule C. Remember Schedule C up here, we report everything in the functional currency first, if we're not using US dollars as a functional currency, and then the translated amounts into dollars. The translated amounts into dollars, same principle applies for the balance sheet. So we have to report everything in USD at the beginning of the year and the end of the year. Now notice what's different about this schedule. There is no reporting of the functional currency and then the translation to the US dollar amount. We are just reporting the translated US dollar amount. Okay, so the worksheet that we would keep internally to make those translation numbers, again, that's just kept internally. We don't actually provide that to the IRS. So if we look at our balance sheet here, we have our offshore company LTD balance sheet in US dollars at the end of the year. So again, all of these values are expressed in US dollars, so there's no need to translate the amounts. Now, if you do need to translate the amounts, you would have a balance sheet in the functional currency, make a USD column here, and the translated amounts is using the spot rate at the end of the year, right? So we're not using the average exchange rate, we're using the spot rate at a certain day of time. So if December 31, 2021 is the end of our tax year, we would use the spot rate on that day to make the translated amounts, okay? So as far as the assets, liabilities, and equity, let's run through these really quick. So remember, again, this is an investment company. So the asset section is comprising of cash and just some investments in stocks and bonds. Down here, they have no liabilities, right? So not a lot of debt, or none debt, rather. On the equity section, we have capital stock and APIC. So you recall John and Jane via her Bermuda company, they each acquired 1,000 total shares of stock, $1 par value. John got 750 and then Jane got 250, so that's the capital stock section. And then APIC, additional paid-in capital, this is the amount that shareholders spend in excess of par value to acquire the shares. So in this case, obviously they couldn't just put $1,000 in. That wouldn't be a very profitable investment vehicle. So they contributed in total $601,000. 1,000 is the capital stock, 600K is the APIC. Now, on the dividend distribution side, so towards the end of the year, the company did distribute dividend income to each shareholder. It totaled $5,000, so 75% went to John, 25% went to Jane's Bermuda company. Now the dividend distributions, if we look at the Schedule F really quickly, you'll notice those numbers aren't reported here. And that's okay because the dividend amounts are reported on additional schedules. So we'll see them on Schedule R, for example. We'll see them on Schedule J when we reconcile EMP and PTEP and all that. So the amount that we're going to see here in retained earnings is going to be a net of these two figures. So let's look at the balance sheet again really quick here, and we'll input the numbers. So again, we're already working with the US dollar amount. So the cash balance, $5,500, other investments, $614,176. Again, no liabilities here, so the AP, other current liabilities, derivatives, loans from shareholders, all those line items are blank. Then we get down to the equity section here. We have capital stock, line 20. This is separated into preferred and common. In our case, we have only common stock. Remember, this is Class A common stock, so $1,000. So 1,000 shares, $1 par value, so 1,000 is issued and outstanding. No preferred stock on line 28. Obviously, if you have preferred stock, you would separately report that. If you have multiple classes of common stock, you still report it all on line 20B, but you're reporting the aggregate number, right? So if you have Class A common, Class B common, Class C common, whatever it might be, the aggregate total still gets reported there. And you can include an additional statement if you want to break out those amounts. That's perfectly fine, but the IRS doesn't necessarily require it. And then on line 21, we see our APIC number there. That's the $600,000. And then again, coming back to this retained earnings number. So $18,676. Retained earnings, remember, is a net. So it's a roll forward of your accumulated earnings and profits minus any kind of deficit. So if you're losing money, and then also minus any dividend distributions. So dividends are distributions from accumulated earnings and profits. In this case, they did have some earnings and profits, right? They have net income of $23,676, so they distributed a dividend of $5,000 out to the shareholders. So if you add these two numbers up, you get that $18,676 number, which is the retained earnings figure there, right? And then the balance sheet, everything balances here. We got total assets $619,676, and the same thing with total liabilities and equity. And that reconciles with our figures here, right? $619,676 in total assets and in total liabilities and equity. Okay, so that covers it for the balance sheet. This page 4, the 5471 Schedule F, again, balance sheet item there. And then at the bottom here is where Schedule G starts. We'll go on to that schedule in the next video, but this does cover everything we need to see for the balance sheet. Actually, I will touch on these statements. So some of these line items you'll see here built into the description. So for example, other current assets attached statement, investments in subs attached statement, other investments attached statement. So you should, if it asks, put the total amount there, and then attach a statement that just provides more detail on what kind of line item that is. So in this example here, we have line 8, statement 3 for the investments is $614,176. So if we go down to our statement 3 here, you can simply see, the reference form 5471, Schedule F, line 8, stocks and bonds, right? So just stocks and bonds, the beginning balance, the ending balance. And that's enough to make it clear to the IRS that you've disclosed all the information that's required by the form. Now, obviously, if you have a lot of different types of investments making up that line item, you might have a more detailed schedule here. So you might have multiple line items. But again, at the end of the day, the total number is what ultimately gets reported up here on line 8. And so we've done the same on line 21. So line 21, they do ask paid in capital or capital surplus, attach a reconciliation. So on statement 4, we've indicated that $600,000 is APIC, right? And that's enough to keep them happy. Okay, so all right, so that covers Schedule F. I hope that was helpful. So now we are going to move on to the next one down the line, and that is going to be Schedule G, other information, and all the various questions and additional worksheets that come along with Schedule G.